a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We are going to explore Homebuilder ETFs now with our ETF strategist, Eric Dutram, who may even give us a little clue as to what he thinks about the Homebuilder market. Has it come back?
You know, I think a little bit, Terry. We've seen some strength in a lot of the housing numbers as of late. We've seen nice housing starts, housing sales. Both these numbers have been pretty solid. And actually, we saw a couple of revisions that moved up the year-over-year growth for the previous months, actually up over 20%. So it's starting to be a very strong market in the housing space, especially after that weak winter we had. So some investors are starting to feel a little more confident about the space. We've seen some growth in home prices, but nothing too obscene. You know, it's still about that 5 to 10% range, you know, depending on the market. So, you know, we're still growing at a nice rate for the housing space, but, you know, it's nothing to get too concerned about in terms of the overall growth. And then, obviously, we have better job growth, and that's playing into the housing story, too, because, you know, obviously, with people with more jobs, more money, they're more likely to be able to afford that housing payment. And I think this is really creating a nice situation for the housing space as we go into the summer.
So what you're saying is no concerns, no worries.
Well, let's not go that far, Terry.
Oh, okay.
We do have some concerns, especially, you know, today we have the Federal Reserve meeting.
Yeah.
And
today is June the 17th. It's Wednesday, so it's the end of the two-day meeting.
That's right. And some people are speculating that Yellen will talk about, you know, either raising rates in the next meeting or give more of guidance for when the first rate hike will come. You know, that could definitely hit the home builder space, because as housing rates go up, it makes home prices less affordable, and, you know, that's going to be definitely a big concern. But I think there's a lot of pent-up demand out there, and, you know, some of the other factors with the job market are going to kind of counteract this higher rate, as long as we see a gradual increase for rates. That's really the key to this whole housing story.
Okay, so you are keeping an eye on this sector through ETFs, right? So are they all similar, the ones you brought with you today to talk about?
You know, you might be surprised. You think, oh, home builders, they're going to all be exactly the same.
Yeah.
But that's not really the case. There's actually a couple nuances to note between the major players in the space here. Figured I'd talk about them in case anyone wants to, you know, take another closer look at this home builder sector, because it's definitely going to be on the move one way or another over the next couple weeks and months. First off, we have ITB.
Right.
This is the most popular fund in the space, has about $4 billion in under management. Roughly 2/3 of the stocks here are in the home builder space. 14% are in building materials. So you're very concentrated in those two sectors for sure. It is also the most expensive, though. It's not too much pricier than the other two out there, but you know, definitely something to consider. And it's probably the best choice if you want a broad look at the home construction space.
Okay. Then there's XHB.
That's right.
What does that stand for?
You know, I don't know. They're sometimes the tickers are a little strange, but you know, this might be one of the cases here.
I guess. Yeah.
But well, you know, HB Homebuilder. I'm guessing that. But
okay.
But this is a spider fund, and this is actually a much broader choice in the space. It, as we can see in the breakdown here, only 33% are in home builders. We actually have 30% in materials, 22% in retail, and 16% in appliances. So you're going to get companies like Home Depot and, you know, Bed Bath & Beyond in this fund, where you wouldn't get them in the previously talked about ITB one. This is the cheapest choice in the space at 35 basis points. So, you know, you're not going to be paying too much cost. It is a equal weight fund as well, so you're not going to get a whole lot of concentration. I think this is the best fund for investors who want the total housing play, if you will. You know, from building it through buying it to furnishing it, like the whole housing cycle. Yes. Yeah. So, you know, you're not going to get as concentrated in the builders, so you might not be as impacted by the rates. But, you know, as people buy homes, they're going to need stuff at Home Depot and Bed Bath & Beyond. So, you know, this is more of a total play.
I can't wait to hear what's in this next one. HOMX, the ticker.
That's actually the exclusively home builders ETN. And as you might guess,
is this an index?
It's a ETN, and basically that means it tracks this index, and you know, as opposed to an ETF, which actually invests in the securities.
I see.
A ETN, it just promises to follow the index and pay you out a return equal to that benchmark.
Got it.
So here, as you might guess, it's all home builders and just 20 stocks in the portfolio. DHI and LEN take up 10% each, so you got some concentration issues to worry about here. But this is probably the best choice if you want to just target those home builders and not worry about some of these auxiliary plays that a couple of the other previously mentioned ETFs do have in their portfolios. There is a 2x version of this fund, so if you want some leverage in the space,
yeah.
HOML is the ticker there. But this is going to be obviously very volatile, so definitely be careful if you're going to take a dip into that one.
All right. Well, thanks for clearing all that up for us. Do you own either of those?
I do not.
Okay. Check out more information on ETFs in the ETF section of Zacks.com. That's our website. If you're not there already, get to the home page. Get to the ETF section by using the Funds tab in the top toolbar. Meantime, with Eric, I'm Terry Ruffalo.